Hello guys, welcome to a new deep value video. Today we're going to analyze FedEx Corporation, ticker symbol FDX. As always, we'll break down the company's key financial metrics and, by the end, aim to determine its acceptable buy price. FedEx is a global transportation services company, and as of the 18th of September 2024, its stock price stands at $297 and has a market cap of 71.6 billion. Moving on to sub-key valuation metrics, the company's price to earnings ratio is 16.4, while its price to cash flow ratio is 8.6. Now let's take a closer look at the company's growth over the past 5 years. We can see that its revenue has grown by 26.7%, while its bottom line has increased by 236.7%. In terms of earnings per share, there has been a growth of 251.2%. However, it's important to note the change in the number of common shares outstanding, which stands at 251 million, reflecting a minus 4.2% change. Additionally, the interest coverage ratio is 9.34, suggesting the company's ability to meet its interest obligations comfortably. Next, let's move on to the balance sheet, starting with the quick ratio, which is calculated by dividing current assets minus inventory by current liabilities. We see that it stands at 1.31. This ratio helps us understand the company's short-term liquidity position. Looking at the long-term debt-to-equity ratio, we find it at 0.71 and the overall debt-to-equity ratio at 0.72. Transitioning now to the cash flow statement. Cash from operations is 8.3 billion, reflecting a change over the past 5 years of 63.1%. Meanwhile, cash from investing activities is minus 5.2 billion, showing a change of minus 11%. Furthermore, cash from financing activities is minus 3.42 billion and has changed by minus 201.3% over the same period. CapEx has also decreased by 13.4%. And lastly, free cash flow has grown by 349.1% during the same time from minus 1.2 billion to 3 billion and is projected to grow to 4.7 billion in fiscal year 2026. Moving forward, let's look at the return metrics to see how the company is utilizing these resources. The return on equity is 16%, the return on investment is 12%, the return on assets is 5%, and most importantly, the return on invested capital stands at 8%. Finally, let's find the acceptable buy price. The first method is conducting a discounted cash flow analysis, using a discount rate of 10%, a revenue growth rate of 5% for 10 years, and a perpetuity growth rate of 1.5%. We get a fair value of $198. Secondly, using a multiples valuation of 20 times trailing 12 months price to earnings, operating cash flow, and 25 times trailing 12 months free cash flow, we get a fair value of $446. Thirdly, Italy's target price is $322, and putting it all together, we get an intrinsic value of $319. Using a 15% margin of safety, we get an acceptable buy price of $271.3, suggesting that the stock at the current levels is trading near intrinsic value. To wrap up my analysis, I rate FedEx as a hold. Personally, I consider investing in it only if its price dropped to sub 270, sub 260 levels. Thank you for watching. If you found this video helpful, please like and subscribe for more deep value analysis. See you in the next video.